Hey everybody, Q here with the Charting Discovery Cramer Contrarian alert and random update for Thursday, June 27th, 2013. And what we're looking at here is a weekly chart of HFC, and this was actually recommended by Cramer yesterday on June 26th, Wednesday. This is a weekly chart, so you can see last week this is what happened. It fell off of these cliffs, off of all these exponential moving averages. It was playing around, consolidating within them, and then boom, it just fell right off. And so that was last week, and this was this week, and this is when Cramer recommended it as a buy. So let's take a look at the daily, see if we can figure out maybe what he was looking at. Okay, here's the daily. No, gosh, well, he recommended it as a buy on this day, so I can't imagine what would have prompted him to recommend this as a buy. This is a strong sell in my mind, and you can see how we went down below the 34-day envelope, stayed below there, traded below there, and then just fell off this waterfall. That's what I call a waterfall. And then we came too far away from this 34-day moving average, and so we had to consolidate and come back up. But now it looks like we're poised to bounce off of it again. So there's a strong probability that this will go down in the next few days. So I just wanted to point that out to you guys, since Cramer did recommend this as a buy. I'm saying, don't you believe it? Okay, now let's look at a couple of random stocks that I just came across that were of interest to me. Let's go ahead and start off with AEP. Here's AEP, same chart, more or less. So we came down, this is the beginning of a downtrend right here, and traded below the 144-day moving average. Could not get above it, really didn't want to go below this 34 envelope either. And so we actually just came down. I guess this was when the market crashed too, but look how the timing is. Really nicely timed right there to come down. Then we came down too far, and we had to consolidate a little more because we can't go up or down too fast, which is regulated by these lines. Look how beautiful that is. It looks like we are just about to touch, this is today's action on Thursday the 27th of June, and it looks like we're just about to touch this 21-day moving average, just like we did back here. But this is actually almost more telling than this bar was, because we opened up and we traded up almost to the 21-day moving average, and then throughout the day the price came back down and actually closed below the open. So we do have a ways to go down on this. I see this going down. It might be bound by this lower 34 envelope like it was back here, but it might not, because it sure wasn't here. So it'll at least come down to this 34 envelope, and then we'll have to see if it's going to go further or not. So that's what I'm looking at for AEP. Now we'll move on over to ED, and kind of the same chart. You can see this is the dashed blue line is the 34-day exponential moving average, and you can see we bounced right off of that when the market crashed and went right down to the lower 34 envelope, and now we did almost the same thing, except this, it might be even more strong, because we opened up on the 34-day moving average. Throughout the day the price went up almost to the 55-day moving average, and then it bounced down off it and came down and went through the 34-day and again closed below where we opened. So that is a bearish signal to me, and it looks like there's a high probability that this is going to go down also within the next few trading days. Now we'll take a look at F like Frank. E, a very similar chart, except we're playing with different averages here. And you can see how we gapped down low below the 34-day lower envelope, stayed below it really well. As soon as we touched it, boom, we tanked down hard again. Again, that's when the market's tanked, but look how the timing is just perfect. Okay, so now we're again trading within this lower 34, not within it, but we're interacting. The price action is interacting with the lower 34-day exponential moving average. And again, this to me is a very strong signal that this is going to head down again, that this particular stock FE is going to head down again. So I was looking at that. Alright, now we're looking at CTSH daily, and you can see kind of what's going on here. We kind of got trapped more or less between the 21-day moving average red and the lower envelope 34-day blue. We did try to trade above these averages, and boy, it just didn't work. As soon as we traded above this 34-day moving average, that's what the dashed blue is, we closed above it and we opened above it, and we just tanked right through everything. The next day was a little bit up, and then we kind of proceeded to trade between the 21-day moving average and the lower envelope. Had a 2-day uptrend here, and then this bar to me is pretty telling. We're very close to the 34-day moving average. Might have touched it, we'll find out tomorrow when the bars render. But we opened very close to it. We opened above the 21-day. and came right down through the 21 day, and the price action did not last above the 21 day, and we closed almost at the lows, well below the 21 day, so that did not offer us any resistance. So I see the trading range continuing between the 21 day and the lower 34 day moving average, so there might be a little money to be made there if you're that type of trader. Now we are looking at LAMR, the daily, and this is a great example. We were in this uptrend and we came down and started a downtrend, I would say right about here with this bar. And you can see we are messing around with the 144 day moving average, and this is a great setup. I love this setup. This is the 21 day moving average, this is the 144 day moving average, and this is the price action. And we came right up to it, and there's a strong probability that tomorrow we're going to bounce down off of it. And I'll show you why with a couple of real estate ETFs. So look at this setup, and then we'll go to Broadcom, BRCM. And look what happened. Again, the 21 day moving average, the 144 day moving average, bounced up off of this lower 34, and look what happened today. Boom, we came down off it hard. So there's a strong chance that might happen tomorrow. High probability that might happen tomorrow. Not with this stock, but with LAMR. I'll go back to that. LAMR. It's a different setup. It's very similar, but it is different in a lot of ways, actually. But we'll see what happens. Okay, now let's look at some DRN is a real estate ETF. And this is the same type of setup. You can see below the 144. And this is actually below the 34 lower envelope. But here's the 21 right here. And that came pretty close. And it's the same type of setup. And we came down off it hard. And here we're about to do it again. There's a chance it might test this 144 day moving average. Maybe at the same time the 34 comes down to touch it. It might all interact probably next week sometime. So that'll be interesting to watch. Alright, there is your charting discovery, Cramer Contrarian alert, and random update for Thursday, June 27th, 2013. This is Q signing off. Thanks again for your time. I'll see you next time.